Something's just happened that hasn't happened in a very long time. The last meeting of the Federal Reserve, which was the last week of December 2023, for the first time, they have acknowledged that federal rate hikes are over, most likely. And in fact, for the first time, they have mentioned decreases in the federal funds rate expected to come towards the end of 2024. This is huge for mortgage interest rates because for all of 2023, the Fed has maintained this higher for longer policy. And now they're taking the position that they think inflation is back under control or heading that direction. And there are federal rate cuts in sight for the first time since the beginning of the rate hike cycle. This is really important because it's going to dictate how 2024 plays out in the real estate market. Hey, before I go any further, check out the description below. You'll find a couple of links there. The first will give you a monthly home value estimate dropped directly into your inbox, and the second will allow you to search for all Triangle area homes. Lastly, please like and subscribe. It just helps YouTube know that you like the content. It helps us reach more people. I have some predictions that I made at the latter part of the year. I think this falls in line with those. It's going to be interesting to see when those rate cuts actually take place. Right now, they're saying towards the end of the year. I have a feeling it could even come as early as the summer because we're going into an election, whether you like it or not. Sometimes these things are politically motivated. And most likely, we're going to go into that election in November with a decrease in the interest rates. What is that going to do, though, to the housing market? Because there's this question about where do rates need to be in terms of the 30-year fixed rate mortgage in order to free up the housing market. As I've talked about a lot, we've been in this frozen market where people that have really low mortgage rates don't want to sell because they don't want to trade their 3% mortgage for 7% or even a 6% in some cases. So there's a lot of gambling going on about what that magic number is. How far do rates need to fall in order to get some of those people moving? I think it's probably going to be in the fives, and there's a good chance we're going to get there by the end of the year. But there's something also going on that I think we need to take note of. So millennials are becoming the largest segment of the population as the baby boomers begin to pass away. And millennials are people that are aged 27 to 42, born from 1981 to 1996. And they make up 21.67% of the population, which is the largest segment of the population currently. Right behind them is Generation Z, which is actually the younger generation, people born from 1997 to 2012. They come in at 20.88%. And the baby boomers are currently at 20.58%. But for the longest time, the baby boomers have been the largest generation. And what's happening to those folks is they're aging. A lot of them are downsizing or moving into assisted living or, unfortunately, sometimes passing away and either leaving behind real estate or selling real estate as a part of their estate. And so here's the big takeaway, though, that I think is most notable. Right now, 52% of millennials are homeowners. Compare that to the baby boomers generation, which is 78% of baby boomers are still homeowners. That's a big gap, okay? Look at that side by side with the percentage of homeowners at age 30. So the baby boomers, by age 30, 51% of baby boomers were homeowners. Millennials, that number was only 42%. So one can assume that as time goes on, and if rates come down, that is going to get a lot more millennials into the housing market. And that gap should start to close from 52% currently up to north of 70%. Right now, 70% of Gen Xers are homeowners. I think there's a general, there seems to be a general trend emerging among the younger generations that prefer to rent because they don't want to be tied down to a specific location. I have thoughts on that. I think it's a terrible idea. If you've watched my videos, you probably know that. But I'm also real estate is my job. It's my living. It's where I invest. I've witnessed and I've lived the benefits of homeownership and owning investment properties. But I think it's fair to estimate that the millennial generation won't get up to 78% like the baby boomers did in terms of homeownership. But I think there's also room to grow. I know personally people that are in the millennial generation that don't own homes that would like to and just can't right now because of the cost. So I think as rates start to come down, that will be the mechanism to get a lot of these people off of the fence and into the housing market. And we should see a massive spike in first time home buyer activity as that happens. So there's a ton of pent up energy right now, just waiting for a catalyst to get them into the market. And I think as we go throughout the year, we're going to see buying activity shoot way up as these rates start to come down. The issue is, though, I don't think we're going to see the same level of activity on the selling side because, again, we have this massive segment of people that have really cheap mortgages, and it's going to take the rates to fall another percent or two to really get them into the market. I'm going to put a couple of graphs up. First is going to show the interest rate trends over the past 12 months. And you can see where they started to spike, where they finally peaked, and then when they started to come down. Now, if we look at the 6-month graph, it's a little bit more dramatic in terms of that peak. And then if we just zoom in on the past 3 months, you'll notice a very steady downtrend. The question is, does this continue or does this level off? There's a very large gap, unusually large gap right now between the prevailing 30-year fixed rate mortgage and the 10-year treasury note. There's usually about a 200 basis point gap between the two. And right now it's larger. It's working on closing, but it's got room. Mortgage rates have room to come back down without the Fed touching the federal funds rate. So if they do start cutting and they make clear signals that that's going to happen, we should start to see rates fall even further. I think once we get under that 6% number, that's when things could really turn wild for the real estate market. And as I mentioned, if we have this surge in buyer activity and we don't have a matching surge in seller activity, you know what that does to prices. That will send prices even higher. And I've got people ragging on me on YouTube because I keep saying prices are going to keep going up. But listen, every year there are people out there calling for an imminent housing market crash. And I understand it because it just is a natural thing. Everything moves in cycles. If it goes up, it must come down. But without the market fundamentals behind that, there is no mechanism to cause prices to fall. One of the things that's going on in the real estate market and has been for a while is institutional buyers just buying up inventory. I got an offer the other day on one of my listings from an institutional buyer. I haven't seen that in a while. Seems like they're picking back up. I'll go into this deeper on another video, but it's going to sound a little bit conspiracy theory. But if you Google World Economic Forum 2030 predictions, this is a real group of people, the elite of the elite, that gather in Davos, Switzerland to basically set a global agenda. And one of their predictions is that by 2030, you will own nothing and you will be happy. What that means when you go into it is everything that you want, you will rent. And that includes housing. And there are things that are happening right now in the real estate market that are outside of the normal cycle of real estate. Because when a large portion of the inventory is held by corporations or institutional buyers that don't intend on selling that product, it puts constraints that are outside of the norm on the amount of homes for sale in the market. And again, we know that when we have more buyers than sellers, prices go up. So I know that's not what a lot of people want to hear. I know a lot of people are waiting to buy because they just feel like prices have to come down, and that's a natural feeling. I just don't think that the data supports that. So I'll go deeper into that World Economic Forum prediction. If you haven't seen or heard of that, highly recommend you look it up. There's some very scary and interesting predictions that they're making to take place by 2030, and there's plans in place to execute those agenda items. So I'm looking forward to a busier year in the real estate market. I think a lot of people are. 2023 was certainly sort of a breather, and it looks so far like 2024 is going to be much more active. I've even noticed it in our business just with the volume of calls that we're receiving, people getting into the market that haven't been. If you haven't liked or subscribed my page, please do it. Please click the subscribe and the like button. It helps us reach more people, lets me know that you like what we're putting out. Even share it if you're so inclined. That would be wonderful. Leave us a comment below. Let us know what you think. Anything that I said in here you want to challenge or question, I'm always open for debate. I'm not right all the time. I don't consider myself gospel or anything like that. I just am looking at data and making predictions based on the information that I've got. So if you see something I'm missing, please point it out. Otherwise, catch you next time. Thanks.